Alright everyone, Cowboy Trades here, welcome back to the channel for another update. So in today's video, we're going to be providing an update on what's happening in the macro for both the S&P 500 and Bitcoin. I'm going to be letting you know exactly what my new price prediction is for Bitcoin. This is going to have both a bullish and bearish spin on this, so there's opportunities to spin the market, play both sides, make money either way. And I'm also going to be discussing, is Bitcoin ready to come up and make a new all-time high in my opinion. So let's dive right into this, starting off with what's happening in the S&P 500 right now. I wanted to start off with the equities because in terms of the E-mini futures for the S&P 500, not the actual SPX, if we're looking at the S&P 500 futures, you can see today they literally came up and made a new all-time high. If we're looking at the CME liquidity tool, you can see liquidity in terms of what's happening in the equities right now is provided at a greater rate than what was happening previously in the bull market top of 2022. So in terms of the S&P 500, in terms of Bitcoin, at least what's happening in the short term, you know, volumes coming in, liquidity supporting the rally, the E-mini futures for the S&P 500, basically the SPX futures hit new all-time highs today. And I think it's very, very likely that we see continuation for the next couple of days, for the next couple of weeks or so. There are, however, in the macro for the equity markets, some slight concerns that I would like to raise, and this does also tie in with Bitcoin. So once again, in terms of the short term, there's a spin on both of these. In the short term, for both Bitcoin and the S&P 500, you know, they're looking up, they're looking like they're going to continue their rally, at least for the next couple of weeks or so. However, in the macro, for the S&P 500 specifically, while we're wrapping up this segment, there are some causes for concern. Now, we highlighted these about 3 months ago. In terms of all the economic data, I don't really want to provide too much of an update for this. We made a video 31 minutes a little while ago, and we probably displayed about 100 different fractals. All of those fractals in terms of the economic data are really unchanged. The main ones we provided were, of course, in terms of the interest rates and also the yield curve. Every single time in history for both Bitcoin with its limited data present and also the equity markets with, you know, a greater amount of data to backtrace this on, every single time we've seen a high rate environment followed by rate cuts, you can see, you know, economic contractions happen, recessions happen, large drawdowns in terms of the equities, and also for Bitcoin, whenever the interest rates had been previously cut, you know, back here at 2.5%, Bitcoin saw a correction from 14,000 all the way back down to 4,000. There's definitely going to be people saying the only reason Bitcoin came back down to these levels is because of the Black Swan event, but I would like to highlight, you know, this happened around about February, March of 2020. Before that entire event happened, Bitcoin corrected 53% before any of that happened due to the fact that the interest rates were being cut. And it's the same for the equity markets. So in terms of the short term, you know, liquidity's present, volume's present, everything is supportive of further continuation back up to the upside for equities. And I think the S&P 500 is probably a few days or a week away from making a new all-time high. But in the higher timeframes in terms of the macro, coming into next year, if the Fed does start to cut their rates, I know they've been talking about keeping the rates higher for longer. That's exactly what they're doing right now. They're not raising, they're not cutting. They've paused all the way up at 5.5%. They did something very, very similar back in 2008, pausing at 5.25%. And of course, massive economic contractions happened after these high rate environments. In terms of the bond market, tying back into the yield curve, we still haven't really seen a significant reversion back up to the upside. Previously, you know, when the yield curve, the 10-2, when the 2 starts to, you know, dramatically drop back down to, you know, normal levels, right now, you know, the yield that you're getting on the 2-year government bonds is exceeding what you're getting on the 10-year government bonds. That's why, obviously, simple maths, 10-2, when the 2 is, you know, dramatically outpacing the 10, you've, of course, got a negative inversion of the yield curve. Now, what's quite interesting is if we come over to these individual yields is, you know, both of the yields are kind of coming down. If we're looking at the 2-year government bonds, you know, these have started to move back down about 17% or so in the past month or so after making a new all-time high back on the 16th of October. However, it really hasn't dropped dramatically. If we're looking at the 10-year government bonds, it's looking a little bit more bearish for the 10-year government bonds. These are down 24%, which is really showing when we come over to the yield curve, potentially, you know, there's still going to be a couple of more months or so before we really see that reversion to the upside of the yield curve, before we see the Fed, you know, really needing to cut rates. So the thing is, for for the next few months or so, until, you know, we kind of experience those rate cuts, I think the markets are going to be looking to the upside. So I think the markets are looking up for the rest of the year. I think the markets are going to be looking up throughout Q1 of 2024. However, let's say end of Q1, or let's say Q2, to make things very, very simple, when the Fed does cut the interest rates, when the yield curve does return to the normal, if history is any indication, this is normally when we see, you know, recessions. This is normally when we see economic contractions, and this is still really my base case of what's going to be happening in the macro. However, like I said, in the micro, futures are making new all-time highs for the equities. Liquidity is supportive of this, volume is supportive of this, and it is the same for Bitcoin. So moving on to the Bitcoin segment, if we're zooming in on the daily time frame, as you can see, despite the fact that Bitcoin is kind of grinding up, making, you know, higher highs, higher lows predominantly in the past week or so without a higher high, the stochastic RSI has actually come down and fully reset on the daily time frame. It's looking like Bitcoin wants to grind up. As you can see, Bitcoin is up about 3% on the daily time frame. The total cryptocurrency market cap is up about 2% on the daily. Solana zooming through the rest of the markets today, up 12%, $81.50, heading up to that $100 price mark that we talked about in yesterday's video, where we talked about this new Solana token that I have just entered. Hopefully some of you saw this, hopefully some of you got into this at a good price. Since the video we uploaded yesterday, when it was between 15 and 14 cents or so, it's up about 25% or so since that call. And, you know, a little bit earlier on today, a couple of hours ago really, it actually made a new all-time high. So from our call, this went up about 45%. It's having a slight correction right now, but I'm still seeing the same premise of what I was highlighting in yesterday's video, and why I really like the market structure of this. It's just higher lows, higher highs all the time. You know, it comes down, it makes a higher low, stochastic resets, it just keeps on zooming. So I won't talk too much about this. I really want to focus on Bitcoin and the equities for this, but, you know, just a quick highlight, the crypto markets are up today. Momentum is still carrying to the upside. And this is what I want to talk about for the macro and the micro for Bitcoin. In the short term, things are still looking up. We'll talk about some causes for concerns, and is Bitcoin able to make a new all-time high anytime soon in just one moment. But in terms of the short term, Bitcoin is moving up at this moment in time. This is supported by hash rate making new all-time highs. This is supported by liquidity in the lower time frames. This is supported by the fact that Bitcoin is rushing up to fill the CME gap up here at 54,700. But here is where things definitely get sticky. So in the immediate short term, there's some bullish price targets for the next couple of months or so until the Fed do cut the interest rates. Once again, I've talked about this in previous videos. When the Fed cuts the interest rates, we normally see a very, very quick short-term rally. Most of the time it lasts a couple of days, maybe a day, 24 hours, 48 hours, 72 hours, something like that. It normally rockets up to the upside and then instantly starts to rug back down to the downside. This is normally what happens when the Fed cuts the interest rate. So in the short term, things are looking up. My price targets for Bitcoin, I believe we mentioned this quickly in yesterday's video. This is kind of the next resistance I'm seeing for Bitcoin, 48,500. I think this region roundabout here is pretty much going to be a magnet at this moment in time. The market structure is looking good for Bitcoin in the lower time frame. So in the next couple of weeks or so, well, maybe even in the next week, judging by how the markets are moving, every single time Bitcoin's been putting in these green, red, green formations, we get continuation. Green, red, green, continuation. Green, red, green, continuation. Green, red, green. We're currently seeing that right now. I think we're going to see continuation coming in the next week or so, coming up to my first price target at 48,400. That's about an 11% move. The next kind of area that I would be looking at would be this CME gap all the way up here. This would be a 23% rally up to 53,700, and there is another price target you might want to take note of in the midst of that. If we draw from the swing low to the swing high, you can actually see the 618 Fibonacci is right here. The price target we pretty much mentioned before, 48,700 is where the 618 Fib is. This is just going to be a couple of $100. This is literally just going to be about $100 above this massive resistance at 48.5 or so. So this is what I'm seeing. In the short term, I think Bitcoin has the room. I think it has the legs to get that continuation back up. Once again, we talked about this yesterday specifically for Solana, letting you know what I was doing in the markets. But for Solana, I think Solana is going to move up to about $100 before we see any sort of macro correction. If you want to know my price targets for that, and if you want to know a little bit more about my thoughts, then check out yesterday's video. The Solana token is printing millionaires. But once again, the micro and the macro are different. There's a bullish and a bearish swing on this. You can make money both ways if you are trading this market. In the short term, I would be looking at bullish positions. I would be looking at longs. I would be looking at spot buying a few different things. Really just taking advantage of the short-term rally. Nothing crazy, nothing too long-term. Like I said, I think Bitcoin probably moves up throughout Q1 of 2024. But can it make a new all-time high? Well, first of all, if we discuss the micro-macro before the macro-macro, if we're looking at the weekly time frame, the stochastic RSI is starting to top out for Bitcoin. Now, this doesn't mean that Bitcoin can't come up to the price targets we mentioned, 53,600. It does, however, mean if you do look at this and if you do kind of recognize whenever Bitcoin comes up to this sort of level, most of the time, more often than not in the macro, if you are selling at these regions and expecting a correction, most of the time, more often than not, you are doing very, very well in these markets. And not only the weekly time frame is topping out on the stock, you can see the monthly time frame right now is literally at 100. So would I be saying that Bitcoin is ready to blast up to a new all-time high without a significant macro correction? Absolutely not. The short term, for equities, for Bitcoin, things are looking up to the upside. I still think, once again, Solana could move up another 20%, Bitcoin could move up another 20%. The rest of the crypto markets could definitely move up more. However, you know, looking at the stock right now, things are pretty black and white. That rally from 14, 15,000 all the way up to 45,000, especially in the past few months or so, we've really just been putting in these insane bullish engulfing candles. And at some point, I do think this overextension is going to start to come back down to the downside. So in terms of for the next few months, for the next month or so, Bitcoin will definitely get continuation, in my opinion. Micro macro, I think Bitcoin moves up to about 48,000, up to potentially as high as 53,600. I would also like to highlight in the micro macro more so than the macro macro, the Bitcoin funding rates have been higher for longer, for quite some time right now. Really, throughout all of October, November, December, the funding rates are heavily to the upside, which means that longs are paying some hefty premium to keep their longs open. And once again, with Bitcoin approaching these resistances at some point soon, it's going to look more profitable. It's going to look more enticing to be on a bearish standpoint than a bullish standpoint in the micro. However, like I said, micro, things are looking to the upside. In the next few weeks, in the next month or so, if Bitcoin starts to move up to this 53,600 CME and fills it and nothing changes in the macro, then I would be potentially looking at moving to a bearish stance in the immediate short term. Micro macro as well, I think something like this will happen. Bitcoin will move up to 53,600, fill this CME gap. You may also see on the CME futures there is a new CME gap formed about 2 weeks ago down here at 39,300. So this is really my micro macro prediction, to have continuation back up to the upside, really probably about another 22% rally. At which point, if the funding rates haven't reset, on the weekly time frame, we could definitely see, a 26% move back down to the downside, coming around to about 39,000 or so. And this may take a month or two to develop for both of these bullish and bearish price predictions. And then this kind of leads us into the macro. If we are in this position, kind of hovering around this range, and then the Fed do cut the interest rates, what is likely to happen? I don't think Bitcoin at that point would be ready to make a new all-time high, because of the reasons that we've mentioned so far, and also due to the reason that liquidity is more present than it has been in previous cycles. However, we are still seeing a contraction in terms of liquidity at this moment in time. Now, one thing that I do want to highlight is if we do come over to the M2 growth of the Fed, ECB, Bank of Japan, etc., and look at the year-over-year rate, you can see obviously we went negative. That's why we're positive right now in terms of the year-over-year M2. However, when we're looking at the broad M2, the M2 money supply is definitely still witnessing a contraction. If I do zoom out further, you can definitely see, the M2 money supply has massively expanded, especially since round about 2020 when it saw this massive explosion. Liquidity is definitely more readily available in the markets than it was a few years ago. However, with that being said, there has been a significant contraction in liquidity from its top back when Bitcoin in the equity markets topped out in 2021/2022. And we're not back at these levels. So this, to me, looking at the macro, I'm saying, in the short term, things are looking up. But in the macro, is Bitcoin ready to make a new all-time high? I don't think the liquidity is sufficient at this moment in time for Bitcoin to make a new all-time high. That doesn't mean we can't continue up to these price targets we mentioned at 53,400. It does just mean that from a logical perspective and looking at from a fractal perspective, it doesn't seem very, very likely. Now, I noticed two different fractals with the two major bear markets that we've previously seen in Bitcoin, the bear market of 2017, 2018, and the bear market we saw, 2014 to 2015. If we are, first of all, focusing on the bear market in 2018, what I would like to highlight is, Bitcoin saw a massive, massive rally from around about $3,100 all the way back up to 14,000 before the Fed cut the interest rates. And then, of course, we had that massive pullback down to the downside. This is personally one of my base case predictions where Bitcoin kind of comes back up, hits these targets, starts to come back down to the downside, then it really forms a double bottom. And then coming into the halving of, the following year, that's when we're really going to see the real bull run take place in crypto. I would also like to highlight, back in this bull run over here, I think a lot of people thought after Bitcoin moved from $3,000 to $14,000, witnessing a 340% pump, only 29% away from its previous high. I'm sure a lot of people were ready for Bitcoin to make new all-time highs, but once it became within round about that 30% range of its previous all-time high, the Fed cut the interest rates. As you can see here, liquidity was a lot flatter back here, but we were seeing somewhat of a liquidity contraction in global net liquidity. What you can really take away from this is that, liquidity conditions, they just weren't supportive of Bitcoin making new all-time highs back here. And it's the same thing over here. We're seeing a slight bump in liquidity, just like we saw a slight bump in liquidity back over in this previous fractal, but rates were high. Once the Fed cut the interest rates, you can see it happen here. Bitcoin experienced a very, very nice rally for 1 week. For that 1 week back here, it exploded to the upside from round about $10,800 all the way up to $14,000. And then as you can see, after the rates were cut, the markets, Bitcoin and the S&P 500 got absolutely crushed. So I think it'd be interesting if a similar fractal plays out. Now, the price target that we mentioned before with this first resistance level coming in at around about 48,000 is interestingly enough about 30% away from Bitcoin's previous all-time high. Now, it can move further. Once again, we can fill this CME gap up at 54,000 approximately and be about 22% away from its previous all-time high before we start coming down and filling the CME gaps we mentioned down here at 39,000 or so. Once again, this was, somewhere along the lines of my prediction that we mentioned just a second ago. But this is genuinely what I'm looking at in the macroverse for Bitcoin. Now, once again, if we're coming over and looking at this cycle, things are very, very similar, except rates are much, much higher. And I think the impact of a rate cut is going to be much more exponential than what we saw in the previous cycle. I think Bitcoin is going to see a very, very nice rally to the upside. Maybe it comes up to that 54,000 CME before having that crush back down to the downside. But once again, to answer the question, is Bitcoin ready for new all-time highs? I don't think interest rates, I don't think the economic environment, I don't think global liquidity is currently supportive of Bitcoin coming to new all-time highs. Global liquidity is still much higher than it was in 2020 before the expansion. However, we've seen a significant retrace. And despite that significant retrace, Bitcoin is pretty much back at the levels of where liquidity was most prevalent in these markets. So, judging by that perspective, once again, short-term bullish, I think we can continue moving up in the long term. I do, however, have to shift my focus in the macro to, coming down to these price targets we talked about. 39,300 is the first micro CME gap. The major one I've got my eyes down here on is 20,300. I think it would be very, very nice to have a convincing double bottom because there wasn't really any bottoming structure over here. You could argue, hey, this was a W, but W's don't typically mark the bottoms in market structures. Now, if we do come over to our previous cycle, you can see there was something interesting that happened over in 2015 where, you had that double bottom, just like you had the double bottom over here, but you just continued grinding up and up and up. And you could say, coming over to liquidity, hey, liquidity really wasn't sufficient for Bitcoin to move up at this time. Well, this was when Bitcoin was priced around about $175. It did not take much flowing into the market for it to have a rally to the upside. So liquidity was much less of a necessity back in 2015 than it was today. But one thing that the 2015 rally had going for it, where Bitcoin didn't see this type of phase where it had an explosion to the upside, then it had a massive pullback, creating that double bottom before coming into the new cycle. This was the scenario of 2015 where we just kept on grinding up and up and up. And this is kind of what it's looking like right now. Every time we're grinding up, we're having a correction, it's getting bought back up, we're making a new high, it's getting, pushed back down very quickly, it's getting bought back up, pushed down very quickly back up. And this kind of stair-stepping scenario where Bitcoin just, euphorically ran to the upside, it's looking pretty similar to what we're seeing right now. But once again, the main difference is between these two markets is that Bitcoin had rates between 0 and approximately 1.5% back then. We were in a very low rate environment, and then we started seeing sufficient liquidity come in round about 2016. We're not seeing any of those things at this moment in time. So once again, this is really my argument on why I don't think at this moment in time we're ready to enter, a bull run in terms of Bitcoin making new all-time highs. In the immediate short term, like I said, I think the equity market's primed for making a new all-time high. I think Bitcoin is primed to come up to around about 54,000. Could I be wrong, and could Bitcoin swing failure pattern above this level, come up to 70,000? Fed cuts the interest rates, or maybe even more interestingly, we lollygag around these levels, we hit the CME gap, Fed cuts the interest rates, Bitcoin pushes up to 70,000, makes a new all-time high, then we come down to the 20,000 region, hit that CME down here, and then start exploding into the next cycle. Something along these lines is really my prediction. So once again, in the immediate short term, things are looking up. I think Bitcoin is coming to these price targets at 48,000 to 54,000. There are these overhanging concerns, such as the high interest rates, which just, if history is any indication, it's not really looking like we could potentially be seeing, much more explosive growth to the upside. So coming into Q1, I'm looking very bullish on these markets. I think Bitcoin's going to get continuation. As soon as the Fed cuts the interest rates, that short-term bullish euphoria, that short-term bullish cowboy is definitely going to switch. And once again, my base case that we've been talking about on the channel for the past year or so, in terms of the macro, in terms of the recession, in terms of the economic data, in terms of the inverse yield curve that we've been discussing with a potential recession on the horizon after the Fed cuts the interest rates, I think these are all still absolutely on the table. We are just shifting into a short-term bullish stance, taking advantage of the market, trying to make money both ways. Wrapping up the video on the daily time frame, I would also like to highlight that Bitcoin is currently forming a slight bearish divergence. However, like I said, things are looking up. I think something like this could happen in the micro. Bitcoin hits our first price target. This was the 618 fib, if you remember. Also the resistance right up here, round about 48,500, at which point we could see the funding rates, finally start to top out. And with the funding rates topping out, Bitcoin could see a healthy correction in the micro, coming back down to around about 42,000. In the following, month or so after that, Bitcoin could start pushing up to the CME gap. Fed could cut the interest rates in, let's say, February or March. Bitcoin explodes up to the CME gap, hits around about 55,000, surpassing the CME. And as, of course, the Fed has cut the interest rates, Bitcoin could come all the way down to the CME gap at 20,300. This is my prediction. This drawing that I've overlined here in the immediate short term in the following weeks or so, I think Bitcoin's going to move up to 48,600, at which point I think the markets would be looking for a healthy bearish correction just to take place over probably 1 week or two, considering how quickly these dips get bought back up. And then I think Bitcoin would be pushing up throughout the rest of Q1 2024. And then as the Fed cuts the interest rates, that is when I think Bitcoin and the equities will see that significant economic contraction. So for today, my friends, that's all I've got. Hope you enjoyed today's video. If you did, make sure to smash that like button, leave a comment, share the videos with your friends. If you want to further support the channel, feel free to click the join button on the YouTube page and become a member today. It's been your boy Cowboy Trades. I'll see you very soon. I'm out. Peace.